From the MarketPulse news desk in Shanghai, I'm Michael Klibaner, Head of Research for Greater China. In 2012, net absorption in the Tier 2 office markets in China was largely stable compared to 2011 at just over 1 million square meters. In 2012, we saw office rents grow slightly at 1.6%, and we saw supply also increase slightly at about 16%. Going forward in 2013, we do expect more new supply and stable net absorption at, again, about 1 million square meters with similar incremental rental growth at about 1.5%. Overall, the Tier 2 office markets remain relatively challenging for developers and landlords given the supply outlook. In contrast, in Tier 1 markets, we see the vacancy rates are extremely low. In Shanghai, vacancy rates hover in the mid-single digits, and Beijing has reached a new all-time low Grade A office vacancy rate at 5.1%. However, net absorption in both markets was off significantly in 2012. In the Shanghai CBD, net absorption fell 62% compared to 2011, and in Beijing, net absorption fell 69% compared to 2011. However, that's not the whole picture. In Shanghai, the decentralized market for Grade A office was really the key story, and net absorption there was quite significant. And in fact, overall, adding the CBD and decentralized Grade A markets in Shanghai, in fact, at 730,000 square meters of net absorption in 2012, Shanghai may have had the greatest amount of net absorption of Grade A office space in the world last year. Now, with that said, rents were largely flat for the year, up only 2.1%, having declined slightly in the fourth quarter. When we look forward to 2013 in Shanghai, we think further rental weakness may be possible in the first half, but likely to stabilize and start increasing again in the second half, based in part on increasing corporate optimism, and we anticipate demand to rebound in the second half of 2013. In Beijing, in part largely due to the very low vacancy rates, rents grew, in fact, 17% for the entire year, although they had slowed down significantly in the fourth quarter. Rents were largely flat in the fourth quarter. When we look forward to 2013 in Beijing, we anticipate rents to be growing more modestly in the 4 to 8% range. Now, in the retail market, rents did continue to grow stably throughout 2012, and demand from retail brands continued to be quite strong. However, the key story was supply delays, particularly among those very large-scale mega malls above 150,000 square meters, where we saw significant delays due to a variety of reasons, including construction issues, permitting, as well as potentially slower than anticipated net absorption. We think that this type of supply delay is likely to be another important theme for 2013, and for that reason, we are still not overly concerned about a supply glut in the retail space. In the high-end residential market, 2012 was largely characterized by the policy environment, which remained quite supportive of first-time homebuyers and quite restrictive towards investor demand. This has had the effect of limiting the overall level of activity in the high-end markets, though it was clear to us that in the fourth quarter activity did begin rebounding, particularly in the Tier 1 cities. In 2013, we do anticipate the policy environment to remain the key story, with the likelihood of increased support for first-time homebuyers and a reiteration of the strict enforcement of those home purchase restrictions throughout the year. With your fourth quarter update, I'm Michael Klibaner.